JOLTS numbers out showing openings at 11.4 million and then the quits at 4.4 million. The new data adds to feelings of a white-hot labor market, according to a Bank of America report reviewing customer bank data. Joining us for more is David Tinsley, who is the Bank of America Institute senior economist. And help us dive further into this data, particularly just describing the white-hot nature of the U.S. labor market and what type of data you were able to lean into to conclude this.
Yeah, well, thanks for having me on. So what we've done basically is we've looked at our customers' anonymized data set of our customers' payments into their accounts, and we've looked at the annual pay rise that they've been getting in the year to April. That comes in at roughly 9.2%, which of course is above the rate of inflation, and so there's real pay growth across the customer base there.
David, clearly the job market is slowing down. We'll probably see that as well in the Friday jobs report. So you have called it white hot now. What's the next term you think you're going to call it?
That's a good question. But probably hot, to be honest. When we look at our data and we look at the change in the level of job changes, it has tipped down a little bit, and there are other indicators out there that show that the level of postings may have cooled off a little bit. But just like the JOLTS data today, you're really talking about a small drop back from still really stellar levels. So I think hot would summarize it pretty well.
Are there specific kind of sectors, job types, role types that have benefited the most?
Yeah, that's a good question. So I think what's happening at the moment is that you've got this rotation back into the service sector and also into, in a sense, functions that support that service sector. And you've seen some of the jobs growth continuing apace, really, in those areas, but also in things like transportation, of course, as well, because we all know with the shortages, truckers, etc., in very high demand. So it's not in any one sector. It's quite well percolated across the economy, but at the moment it is beginning to skew back more into the service sector, I'd say.
David, low-income households have been hammered by inflation. What are you seeing from a wage perspective amongst that cohort?
Well, that's quite interesting. So what we are seeing is the lower income end of the income distribution, at least in our data, the pay rise we're seeing, and this is a pay rise after taxes, I should say, because that's what you observe when you look at the account details. That's about 12%. It's a little bit above average, which is good news, of course. And for job changes, particularly the young, the pay rises are, kind of almost a multiple of that. So if you're a millennial and you're changing jobs, so by nature you would tend to be less well paid at the start, of course, as well. You might get a 20% rise, so you may have got a 20% rise. So that part of the high turnover end of the labour market really is delivering, or has been to date, delivering big pay rises.
As some corporations are bringing employees back to the office, of course, those negotiations in wage are really kind of to offset some of their expenses, given the inflationary environment that consumers are facing at this point in time. And so how do you imagine that if we do move off of a white-hot labor market, that those negotiations may go forward between employers and employees?
Yeah, that's a very good question. I mean, I think as the labour market cools, and of course it will cool from here somewhat, I mean, that's the very point of the Fed putting up rates, is to cool the economy and the labour market somewhat, then you would expect, you would expect that wage growth to come down. But by the same token, we've probably, I think, reached roughly the peak in inflation, hopefully. And so that should come down too. So the exact playoff between those things is hard to exactly get right. But I think, if the unemployment rate does start to soften up a bit, then I guess some of these pay demands may decelerate into the sort of back end of this year in any case.
David, I'm a very youthful and exuberant young millennial. What type of raise should I be asking my boss for, just so I keep pace with other millennials out there?
Good question. So I think if you're staying in the Yahoo, you might want to you might get around about 11% rise. If you're feeling bold and changing jobs, you may get something closer to 20%. Of course, I think right now, by the nature of all this data, it's historic, and right now there is obviously a little bit more uncertainty about the economy. So you do have to be a little bit more bolder to start looking right now. But by all accounts, the labour market is still very strong, and all the numbers out today, perhaps with the exception of that ISM manufacturing employment index, all the other numbers out today, underline the fact that the labour market's still in good nick.